Hello everybody and welcome to our News Digest. I'm your host, Sabrine, and in today's video we're checking out all the stories that made financial news in the middle of May. But before we get started, make sure you have subscribed to the IQ Option YouTube channel with notifications enabled. So, let's dive in. Tesla removed from S&P 500 ESG Index. EV manufacturing giant Tesla has traditionally always been a good performance stock within the S&P 500, but a shock announcement on May the 18th saw the company removed from the index, with an executive citing ESG concerns. ESG stands for Environmental, Social and Governance, and investors are increasingly using this lens to help them decide which companies present either risk or growth opportunities in the future. In a blog post, the S&P said that Tesla's lack of low-carbon strategy and codes of business conduct, along with racism and poor working conditions in one of its manufacturing plants, affected their ESG score. As a result, the EV giant was booted from the ESG Index as part of the annual list update. Tesla stock reacted fairly quickly, taking 13.5% hit in the 5 days following the shock announcement to close out on May the 20th at $663.90. As expected, Elon Musk's reaction was quick and full of the same colorful which we've come to expect from the SpaceX and Tesla owner. He tweeted, "Exxon is rated top 10 best in world for environment, social and governance (ESG) by S&P 500, while Tesla didn't make the list. ESG is a scam. It has been weaponized by phony social justice warriors." But the billionaire was corrected by an index official who reminded him that the S&P 500 ESG index was ranked by market cap, not ESG score. Terra LUNA cryptocurrency suffers death spiral. Critics of cryptocurrency are often quick to call the entire industry a glorified Ponzi scheme, and after the disastrous capitulation of Terra last week, who can blame them? The post-mortem is an absolute mess, so let me do my best to explain how it all went down. So Terra, co-founded by South Korean developer Do Kwon, was one of the most promising cryptocurrencies to emerge over the past few years. Its main appeal was an algorithmic stablecoin, UST, that paired with the native token Luna would maintain a $1 peg at all times, regardless of what else was going on in the market. It did this via arbitrage, a complex system of dynamic minting and burning to maintain a stable price peg. It's one of the only major stablecoins in the circulation that did so without any real collateral backing the coin. For a long time, the system worked flawlessly, and apart from a few slight blips, the peg against the US dollar held. However, this all came undone on May the 7th, when a large $350 million sale of USD triggered a significant imbalance in the pool. This encouraged a bank run as users rushed to swap out the USD. The resultant selling pressure caused a reflexive downward spiral known as a death spiral in the price of Terra's Luna coin. Despite several bailout attempts, including a $1.5 billion collateral deployment, it wasn't enough to stop the death spiral, whipping around $40 billion of value out of the Luna ecosystem in as little as 48 hours. Co-founder Do Kwon had been fighting off suggestions just weeks earlier that this scenario would play out this way, a claim to which he arrogantly deflected. In fact, he dared any of his billionaire followers to try and attack the mechanism. That's how confident he was in this protocol. Now, Terra Labs is frantically trying to propose a pathway to rebuild, despite having wrecked tens of thousands of holders and investors in the process. The Fed: we will raise rates until inflation comes down. The never-ending story of rising inflation continues in the US, with Federal Reserve Chair Jerome Powell weighing in with their strategy moving forward. With record inflation hitting levels not seen since the 1980s, the Federal Reserve has had to react quickly to prevent runaway economic conditions. Early in May, the Fed raised borrowing rates half a percentage point for the second time this year, a move that Jerome Powell says will continue until inflation comes within the Fed's target of 2%. In addition to the 75 basis points in interest rate hikes, the Fed also has halted its monthly bond buying program, known as a quantitative easing. It also plans to begin shedding some of the $9 trillion in assets it has acquired starting next month. Jerome Powell said he still hopes the Fed can achieve its inflation goals without tanking the economy, but is encouraged by positive labor and low unemployment figures. Late S&P rally saves index from entering bear market. The stock market has been on a record downtrend for almost 2 months now. In fact, the Dow Jones recorded his 8th straight weekly loss, the longest streak since 1932, in the middle of the Great Depression. The S&P 500 and Nasdaq weren't very much better, each recording their 7th straight weekly loss, a feat not achieved since the end of the dot-com crash back in 2001. At one point, the S&P 500 retreated so far down that it was nearing a level at least 20% below its January peak. This price reduction is usually a signal the index is headed into a bear market. However, a late rally in the final trading hour on May the 20th saw the index recover, up 0.57 point or less than 0.1% at 3,901.36. This behavior reveals the worst fears of many investors. There are no safe havens in the stock market, and until the Fed convinces people it can tighten monetary policy and reel in inflation without triggering downturn, it's unlikely markets will stabilize anytime soon. Surging US dollar could eventually reach parity with the euro. For over a decade, economists have predicted that the rising US dollar will eventually reach parity with euro. While after the euro suffered roughly a 7% slide against the dollar over the past few months, some are speculating that a crossing point could happen as early as July. At its lowest this year, the euro fell to around $1.035 earlier this month, rebounding up to $1.057 on May the 20th. This marks just a 5% disparity from the US dollar and the closest it's been since crossing the threshold back in 2002. It's the perfect storm of US Fed action mixed with the fallout from Ukrainian crisis putting a pressure on the euro. So, what impact does that have? For traveling Americans, the tourist dollars will go further, but a weak euro makes imports more expensive in European countries, which in turn causes higher local prices. And we all know what that scenario does for inflation. So, do you agree with Elon's diss of the ESG list? Is it just another example of wokeness gone wrong? Do you think algorithmic stablecoins are a Ponzi scheme? Where would you hide your money during stagnation or incoming recession? And will the US dollar will ever reach parity with the euro? You will just have to watch the next episode here on IQ Option. But as for us, that's all we have time for in today's video. Thank you so much for watching. If you learned something new, or even if you just enjoyed my voice, it would mean a lot to me if you hit that like button below. If you like what you saw and you want to keep updated every time I upload a new video, go ahead and click that subscribe and notification bell as well. See you next time. Bye!